Hello, everyone. This is Alexander Horat with the Gold and Silver Pros. Before we begin, if you could please subscribe to the channel and leave a like on the video, that would be greatly appreciated. And today we're having Doomberg on the show. So, Doomberg is an anonymous team behind one of the most influential finance and energy newsletters on Substack. Recognized by their trademark green chicken avatar, the group brings deep expertise from years of working inside heavy industry, energy systems, and commodity-focused corporate strategy. Hello, Doomberg. Thank you for coming on the show.
Alexander, thank you for having me on. Looking forward to a great discussion.
Yeah, that's great. So this is a question that's probably been asked you quite a few times, but I'd like to ask you, why does Doomberg choose to be anonymous?
Doomberg was created almost 5 years ago now, which is kind of crazy. And we originally decided to be anonymous for two reasons, one primary reason and then a secondary benefit. The primary reason was branding. Um, we built our audience on Twitter in the beginning, when you could still build audiences on Twitter and then port them to places like Substack. And Substack was kind of new and on sort of, it was not yet as mainstream as it is today, to say it perhaps, as nicely as possible. But it has since, of course, exploded in popularity, thankfully, because we're investors in Substack. Um, and so, the customer journey in this business is impression, engagement, email, paid, premium. People go from left to right. And an impression is when you're scrolling on Twitter and you see something and it makes you stop, you interact with it. And a green chicken producing good content on FinTwit makes people stop. Back then, in the early days of FinTwit, um, there were a lot of great anonymous accounts. Um, and we used to follow them and we enjoyed their content. And it was a really vibrant place. I'm sure it still is. We're not active on Twitter anymore for a variety of reasons. But when large Twitter accounts de-anonymized, as some of them did, it kind of just destroys the brand intrigue. You know what I mean? And so if you're just scrolling on Twitter and you see another, middle-aged guy in a tie, you're far less likely to stop if you see this weird green chicken with startled eyes. And um, once we got big, like way bigger than our wildest dreams when we started this project, we've decided to stay anonymous for branding purposes mostly. Lots of people know who we are. It's not like we're afraid of being doxxed or anything silly like that. It's just more for brand. And then the secondary reason is, well, this actually, I guess, a third one too, is that if you're anonymous, people can't cancel you personally. I suppose they could cancel the brand or try to cancel the brand. But really, it reduces it down to a pure argument of ideas. All of our views are authentically held and politely expressed. That's our only rule. The only way to get banned out of our comments is to be impolite. Um, and then thirdly, we're an entire team. And so to represent as just one person didn't feel right, whereas the green chicken is a brand. It represents the project in total. Yes, I am the voice on the podcasts and on the Do Zoom presentations, but a lot of stuff goes on behind the scenes in order for us to be able to research, write, edit, publish, promote, and defend a piece every 4 days, and a Doom Zoom Pro Talk every month, and a couple of promotional videos every year. And so to face forward as a person didn't feel right either. So probably a longer answer than you thought, but there was a lot of thinking that went in behind all of this, and we're happy with where we settled.
No, I appreciate you giving me that information, and I have to agree with you. The green chicken does stand out from people. That's true. I definitely think that's an eye catcher. Are you ever worried of people copying your green chicken and using your voice to make videos?
It happens. I mean, there's nothing you could do. There's lots of fraud accounts on Twitter. There's fraud accounts on Substack. There are accounts on Substack that have just blatantly copied and pasted our approach. Um, we view that as ultimately complementary in the sense that it's just clear that we have, as a team, worked very hard to create something great. We have a strategy for brand and channel and technology and demand creation and operations, and we overlay those 5 pillars with a mindset of continuous improvement. There are no third rails here. This piece landed. Why? This piece didn't land. Why? Wow, our pro subscriptions are up for the month. What's going on? Our free emails are down this month. What's going on? We are constantly, a very small team, very high performing team, and totally collaborative and fixated on continuous improvement on delighting our customers. And so when you get 300,000 plus subscribers as we do, we have a purple badge on Substack. Um, People are going to look at that success and try to emulate it. And the ones who are doing it sort of honestly, it's not a green chicken, but it's an avatar, and they're kind of copying our whole flow and our optimized approach for growing our newsletter. Well, good luck to you. I mean, we're happy for you. We hope you succeed. It doesn't come at the expense of us. Now, the fraud stuff, it's hard. The real danger if somebody creates a fake Doomberg voice, which can be done, and they say a bunch of things that gets us, that we would never say, that then becomes a scandal. But there's a lot of people that such, you know, uh, let's call them trademark pirates or whatever you want to call them. But there's a lot of people that would be targets of that long before they get to us, we think. And this is going to be a real problem in AI. Authenticating genuine human is going to be a real challenge, a valuable one, actually. We have this pro tier I've mentioned, and we do a monthly Doom Zoom presentation, and December's Doom Zoom is on AI. It's called Artificial Intelligence, Notes from Our Own Learning Journey. And we'll probably publish that in a couple of weeks. But there's a lot of fascinating things going on with AI, a lot of challenges. One of the big challenges, what you alluded to, is impersonation, frauds where you get a phone call and it sounds exactly like your daughter, and it's not your daughter, it's a scammer. It's going to be very, very challenging to authenticate humans in the next couple of years for sure.
So what do you think they're going to do with the rise of AI? I definitely agree with you. That's a huge problem because a lot of these AI videos seem so real that a lot of people think they're real. Uh, Definitely as the technology increases, that's going to be a bigger problem. But so how do you think they're going to authenticate people? Is there even going to be a way to authenticate people anymore online? Or do you think it's just going to be you don't really know if that's a person or not anymore?
It's challenging for sure, and the balance is, of course, privacy and individual liberty. So we're seeing things like, in Australia, for example, a classic Trojan horse. The way people give up freedom is fear or protecting children. And in Australia, they're making everybody, well, they are banning people under the age of 16, I think it is, from various social media sites. And there's a very good reason to do that. Look, I mean, studies pretty conclusively show that TikTok and Instagram and Facebook and Snapchat are not necessarily accretive to the mental health of young people. But the moment you pass that law, then everybody participating on the internet has to verify their age, right? And to prove that you're not under 16 is to prove that you're someone. And now basically everyone has a digital ID, and everything you do online is going to be monitored centrally by these dystopian surveillance states.
Yeah.
And so it's a real challenge. All I know is two things. Again, we don't know anything. Our best guess is one, the value of authentically human content is going to skyrocket. Um, and two, technologies that prove who you are while maintaining your privacy would be extremely valuable. But I'm not sure that the intelligence communities of the Western nation states are actively looking for that. They're looking for ways to basically just monitor everything. The Eye of Sauron, as our friend Ben Hunt at Epsilon Theory calls it, the U.S. Department of the Treasury wants to see every single financial transaction in the world as a means of control. And that's real. It's not a conspiracy theory. Um, you know, it's coming. I shudder to think what happens with the next generation because they have absolutely no concerns about privacy at all. They've had to submit in total from the very beginning of their interaction with the internet, whereas at least, I grew up in a world before the internet, and you were mindful of keeping your curtains closed, maybe. And so you can't keep your digital curtains closed anymore, and that's a big challenge.
Yeah, I definitely think people should have the right to be anonymous, but in this digital age, it seems like they want to authenticate people and then lead down the road towards a digital ID and the government knowing everything about you. So how do you think in this age people can stay anonymous and fight this digital ID that's coming through?
Well, we'll see. Important test case with the European Commission's obnoxious and silly fine of Twitter and Elon Musk. I think this is a pivotal moment. Um, if Trump and Vance were not in the White House, would be very, very dangerous in our view. And this is not a political statement. I think it's just objectively true that J.D. Vance in particular is very concerned about free speech in a way that a Harris administration would unlikely to have been. Um, so the very survival of the EU, I believe, could hang in the balance because it is already in a very precarious position because of the war in Ukraine and other things we can talk about. But um, Elon Musk has a way of staring down and defeating enemies that you think he might not be able to. We'll see. When the Vice President of the United States is in your corner, and there's a huge amount of retribution that the U.S. could do to Europe, and ultimately, I think the European Commission's bluff is going to be called. Like, what are they going to do? Stop Twitter in Europe? I mean, I guess they might. Then how do they handle the responses? The European Commission is, in my view, one of the most dangerous organizations on earth, and its demise can't come quickly enough. But nonetheless, it's fascinating to watch. So when we talked about, impersonating an AI and all that other stuff, there's far more people going to go target the Elon Musk of the world than some chicken on Substack that is writing interesting things about energy.
Yeah, I guess I would agree with that. They'll go for the bigger people first, and then eventually go down to the smaller people probably. But let's get into some commodities because I know you're really interested in commodities. We see silver's it's hitting its all-time high today. I think last time I checked, it was $60.63 as of right now. So I want to get your thoughts on why silver is getting so high, and do you think it's going to continue climbing, and what are some of the reasons for that?
Well, I should start with a disclaimer. Silver is not a market we follow all that carefully. My knowledge of silver has been obtained mostly via osmosis by reading my good friend Sir JJ at Market Vibes and a really great trading Substack. And he is as a 50-year commodities trader and started out in the pits and traded gold and silver and oil his whole life. He's been in the silver trade from since the $30 an ounce, and so I read his analysis of it. I don't trade, right? So therefore, I'm less interested in such moves. I would say a couple of things. Um, Icarus prints, like we're seeing now, um, can make for good selling opportunities. I mean, my other friend, Tony Greer, who's a trader, speaking at his conference here in February, as me, person, like it's not like we have big security about our anonymity. He likes to say, which is a great phrase, if you don't sell into strength, when will you sell? You know? And so whenever I see a lot of videos like silver's going to the moon or silver $200 or it kind of I'd be taking a little bit of risk off. If you're in this thing from the 20s and it's tripled on you and you're going to hold it to 200, maybe it'll go to 200. What do I know? I'm not certainly not giving investment advice, but um, you know, all shortages are broadly generally followed by gluts. And if there is a physical shortage of silver and there's a squeeze going on, squeezes generally don't last. The supply demand balance of industrial silver, given somewhat the headwinds of solar, even though it is still growing. I don't know. I follow gold much more closely just because I own a ton of it, and I don't view gold as an investment. I view it as a savings vehicle. So the thing about silver, last thing I'll say is it's reminiscent of natural gas. They're both the devil's trade. Every once in a while, you can make a lot of money, but it'll burn you too. So I would just tread carefully. I understand much like uranium. So I'll give you an analogy. There's a whole uranium FinTwit subsector back in the day. It still is pretty vibrant. And we made some calls on uranium in the 30s, and we were pretty bullish on it. And we, slipstream behind Harris Kupperman's analysis over at Cuppy's newsletter. And in the 30s, it was a great deal. And then I was on a podcast with Justin from the Uranium Insider. I think uranium was like 108. And I was given this exact same spiel. I was like, hey, if you're not going to sell into strength, when are you going to sell? And I kind of like to hit the bid on Icarus Prince. If I was loaded to the gills with uranium, I'd probably be taking a bit of risk off here. And exact same things were being said back then, which is, it's going to 200, it could triple, and it won't matter to the nuclear power facilities. And we had this Sprott Physical Uranium Trust that was just soaking up supply and trying to corner the market. Market corners always end badly. And the uranium bust happened when Sprott's listing for the New York Stock Exchange was denied. And that was a sign that the flywheel might begin to spin in the other direction. And so silver is a commodity. The long-term real price of all commodities is lower. Um, Now, it's a bit of a unique commodity because it's generally not mined for on purpose. It's a byproduct of other mines, and so the inelasticity of supply is pretty high. Um, but at the same time, it's still a commodity. And so we don't invest in commodities. There's better ways to make money in our view.
Yeah, so what ways to make money do you think are best?
Well, I can only tell you what's best for us and how we try to make money. First of all, we build businesses, Doomberg being probably the most important business in our portfolio that we built. So we earn money in fiat because we live in a US dollar system.
Yeah.
We save money by buying real assets, which are broadly divided into three categories: gold, land, and collectibles. And in the collectible side of our savings allocation, that comes down to your knowledge and passion about a subsector and your willingness to put in some time to buy correctly and sell correctly. So, for example, I'm a big fan of high-end watches. I know the watch market pretty well. I like to watch videos on YouTube. And so you see the cycles in the luxury watch market, and you get the right models at the right price at the right time, and then you just stick them in your safe and you don't think about them. Or if you were um, collecting paintings or things like that. But gold is a big part of our savings portfolio. And land is as well. Again, land, all real estate is local, so we tend to buy parcels and properties in places we know well at the right price and then hold them. And then the third thing we do is we invest privately where we can impact the outcome. We like to call it sweat alpha. So our contact list, our expertise, our domain knowledge, our business experience, the companies we invest in, we become very heavily involved with leadership teams if possible. In the private world, deal flow is key. So, we have a very good network and relationships. And private is not for everybody. First of all, you have to be an accredited investor really to participate in the private markets in any meaningful way. And also, there's a lot of fraud in the private markets. It's not regulated. The SEC exists to protect retail investors in the public markets. That's their predominant mission. And so in the private world, I like to say, as I told my children, you haven't learned how to date until you've gone through your first breakup. And in the private world of investing, you haven't learned how to invest until somebody has stolen from you.
Yeah.
Um, and once that happens to you, you come very quickly to a realization, which is an important one, which is a contract is only as good as you're willing to sue to enforce it. And generally, we try to have all of our deals be one pagers because if you need more than one page, you're not investing with the right partner. Now, there's obviously necessities around operating agreements and things like that. But broadly speaking, simple is better in the private world if you're investing with the right people. So we don't really participate in the public markets and that frees us up to write about the public markets. There's two schools of thought in the newsletter world, which is you need to be invested in the things you're writing about because that gives you skin in the game. Our view is that's fine, except it also makes you very biased and makes you susceptible to what we call wish casting. So a great example, there's all kinds of content creators in the energy world who are long energy or are managing money where their investor policy statement is to be long commodities and energy and to pick the best energy companies from the worst ones. They all want the price of oil to go up, right? They want the price of natural gas to go up. And so it's just understandable that they approach the world looking for reasons to try to convince the world that the price of those commodities is going to go up. Since we're not invested in the commodities and we're not managing anybody's money in the commodities, we are free from such biases and we can give you the honest truth. So when we wrote a piece called Peak Cheap Oil is a Myth 2 years ago, we got a lot of flack from the people who, guess what, are long oil and want the price to go up. But I think if you listened to our work 2 years ago and you were investing in the commodity markets, you would have saved yourself some money or even made it on the short side because the long-term real price of all commodities, including oil, including natural gas, is lower. Um, that's because the oil and gas companies are technology innovators and they're giant deflationary machines. And so if you just plot the 50-year price of oil in ounces of gold, you'll see the long-term real price of all commodities is lower. Look at the price of corn in gold. Look at the price of soybeans in gold. Look at the price of silver in gold. Yes, silver's back to $50. It was a price it hit in 1980,
Yeah,
right? I
sure.
mean, and so we've been through an inflationary bout, and oil, the Bloomberg inflation adjusted price of oil using $1983 is $17.50 a barrel. Okay. Like you don't, but buying commodities is like buying the VIX. Occasionally you get a spike, and that spike is alluring. Our philosophy is much better to fade those spikes than to try to time them.
Yeah, so you mentioned land. So what type of land is Doomberg buying? Is it like farmland or is it residential land to have houses be put on that land eventually, or what type of land is it?
We don't do development. We used to buy a fair bit of timberland, and
Mhm.
then you would buy it, log it, and sell it, and the value of the logged lumber would be greater than the delta between what you paid for it and what you sold for it, with a bit of leverage, of course. And farmland, we own some farmland. We own several, residential properties, a commercial property that we lease out. It's not a huge part of what we do. Obviously, Doomberg absorbs all of our time, but when you have excess money and you want to save it. So the thing about land versus collectibles versus gold is you also have to consider liquidity. So land is kind of long-term savings. Gold is very liquid. Most of my gold is in the form of fizz, the Sprott physical gold trust, which I could sell with a very narrow bid-ask spread in large volumes, at any moment. For example, if I need to raise cash in order to make a private investment. And then collectibles is somewhere in between. I could sell my watches on Chrono 24. The bid-ask spreads are pretty wide. Um, and so, I kind of view gold as the liquid part of the portfolio, collectibles as the semi-liquid part, and land as the illiquid part. But like I own my home. I don't like to have debt. I'm a classic sort of gold bug prepper type guy. And so, yeah, pick up a good parcel in the right part of town at the right price and just sit on it. It's a good place to park some extra cash. But what I don't do is invest in the public markets.
So do you not save that much money in the banks? Do you save most of your money in gold, or how
Uh,
does your savings look?
so my savings are basically in short-term treasuries.
Okay.
Again, savings is short-term treasuries, gold, land, and collectibles. And the short-term treasuries are basically an emergency fund, right? Like in a good provider, you want to make sure that something happens to me and the family's okay, and you know, um, or if something befalls us, like an illness or a medical situation where we need some funds, we have a pad, 6 months, 12 months of monthly living expense in short-term treasuries, and then anything over and above that is dry powder waiting for a private investment, either in a new deal or when you're in the private world, you often make multiple investments as your small startup grows. So you could sort of think of Doomberg as a startup, and we kind of view the Doomberg team as a startup innovators with an exit behind us because we've proven product market fit, and it's been pretty successful. And so there's a world where, for example, we could try to go raise money from outside investors and make Doomberg it into a media company with a focus on energy. I think we would do well doing that. Then the question just becomes, is that the lifestyle you want to live? So we prefer to help founders build their own startups. And we're the founding investors in those companies, not really founders, but the first money, like the literal first money in. And if one of those succeeds on a large scale, then of course that could be life changing. And so we make a bunch of those small bets. We Our philosophy is to either build businesses ourselves or help other people build businesses that we're happy to own because they cash flow and they don't need ongoing injections of capital. And then if somebody wants to buy it and maybe they want to overpay for it, well, you hit the bid. And that's been a pretty good philosophy for us, much better than me trying to day trade. I'm not a good trader. I've traded a fair bit for fun. I still have a YOLO account. It's not a meaningful amount of money, but I have a lot of fun with it. It's like betting on the ponies on the weekends. To be a trader, you need an edge. and you need to have excellent bankroll management. I think physics is a great edge, and we're good at defining it, but I'm bad at bankroll management. So my two flaws that I openly admit is I'm a hunch and buncher. When you're pretty sure something's going to work and you bet way too much on it, and then I stare at my losses too long, and when I could have cut things much sooner, you end up getting out with a much bigger loss than you should if you had the discipline to just say, "Oh, I was wrong, and I'm going to take what money is left off the table." So I'm not very good at those two things, and if you're not good at something, you should recognize it. But developing an edge is just as important as bankroll management and trading. And I think we can help our subscribers develop an edge in the energy markets for sure because physics is a great edge.
Yeah, so I find it interesting that you invest in startups. I think that could be a good investment. It sounds like you've done pretty well on Substack. So what do you look for finding a good startup company to invest in?
So the four things you need for a successful startup are a great CEO, a good team, a decent idea, and the ability to raise money. Um, since we're hyper networked and lots of people know us, raising money is one of our strengths. I think we can syndicate deals. And look, we're not a VC firm. We're not operating like Silicon Valley type stuff. But Doomberg's a blog. You don't need a great breakthrough idea. One of our sayings is that disciplined execution is still a durable moat. Like back to the whole, impersonation stuff earlier. Like, good luck to you. Like, we're going to outcompete. We're going to work. We're going to wake up, show up, make the number go up, and repeat every day. Podcast here, Doom Zoom there, article there. We produce at a very high quality. We obsess over quality. We obsess over customer service. Somebody beats us, a good congrats, but we're going to put it all in there. And so, if you give me just one variable, it would be the CEO. Just show me the CEO. The easiest check to write is um, somebody who just had an exit and they're doing another one because they've been through the gauntlet and they've succeeded. I would say that the quality of the CEO, founder CEO, whatever you want to call it, explains more of the variance than any other parameter by a wide margin. And so then if you could connect a high quality CEO with a decent idea and a good team and the ability to raise money, and you set that person loose, great things can happen. And here's the analogy we use for private investing. Um, if I were to describe what a dividend investor is, they're buying big names, blue chips, Exxons, Chevrons, and clipping dividends. That's like buying a fruit tree. You got a tree, it's producing fruit. You harvest the fruit, you get your dividends. It's a nice, stable, solid tree. It's been there for decades. It's probably not going to rot. It's probably not going to crack open. Sometimes they do, but if you buy enough trees, on balance, your harvest will get you a nice, tidy return, maybe above the risk-free rate. Um, if you buy earlier stage companies, you're kind of buying saplings and you hope that they grow into trees. And then when you're the very first money into a private enterprise, you're basically the seed in the ground. It's called seed investing for a reason. Well, the ratio of the weight of a tree to a seed is enormous. And so all it takes is one to be a home run, and you'll get an enormous return on your investment. I mean, it would shock you how little money it took for us to build Doomberg because we had sweat equity. We did everything ourselves in the beginning. Now that we've gotten bigger and we've got a bigger audience, we have a responsibility to be more professional so we've outsourced some of the activities that the very small team of founders used to do for the first couple of years. And of course, it frees up our time as well and try to systematize thing and the thing. And the more we have a team where it doesn't just depend on the founders, the more sellable the business is. We've all read the classic book, Built to Sell. But that tree to seed um, analogy is a very powerful one. And if you could take a seed and nurture it and it becomes a little sapling and then it grows into a tree and it begins to bear fruit, you can make generational money, right? And I can't make generational money trading or investing in the stock market. I think most of it's a Ponzi scheme anyway. Um, and so just think if you were an early investor in NVIDIA, right? Well, I'll tell you a classic story. Sam Bankman-Fried, which we're pondering if and how to write about it. Of course, you're familiar with Sam Bankman-Fried, right?
Yes.
Yes. So Sam Bankman-Fried's in jail because he misappropriated customer funds to make investments in startups. That was actually the charge that nailed him. did lots of things wrong, lots of fraud. But when you're prosecuting somebody, you find the easiest, most blatant one. So you put $1 million of your money at FTX. He took 100 grand of it and made an investment, right? Well, one of the investments that he made was a very early um, investment in Anthropic, which is, AI unicorn now, and is the maker of Claude, really great, um, uh, really great LLM with an excellent wrapper that many people use for coding and things like that. And that one investment, which was a small investment, made everybody whole in the bankruptcy
Hmm.
because they bought a seed and it turned into a tree. See, and so when you're in the VC world, when I said earlier, you haven't learned how to invest privately till somebody has stolen from you. There's a sort of a secondary conclusion to that, which is you haven't really learned how to invest until you've suffered many zeros. Just had a zero this week on an old investment from 2018, kind of sad, annoying. You kind of knew it was a zero in the back of your mind after you got into it. Big flaw was, the CEO wasn't properly vetted. All these things are hard learned, right? I mean, again, every zero is like, okay, I'm never doing that again. I'm never doing that again. Okay. And then you hit a home run. Okay, what happened? Right. And then you go back and see. So if you're in the VC world and you make 20 investments, um, one of those is going to be a home run. One or two might be, wow, very good, double, triple. Um, Four might get you your money back, but not really do anything, and the rest are zeros.
Hmm.
And that's hard for people to stomach because you're just chasing that one unicorn. Now, our whole philosophy is, can we put our thumb on the scale through personal intervention, um, our own skills and expertise and network and so on. And by the way, um, startups succeed for lots of reasons, but they all fail for one. They run out of money.
Hmm.
And so that's why, the old adage is when you go camping, gather as much firewood as you need and they get 4 times as much. Um, in the startup world, we always tell, the founders that we advise or invest in or interact in, like, raise a ton of money when you can and manage your burn tightly. And your objective as a startup is first to get $1 of revenue and then to get revenue above burn. If you have revenue above burn, you can't go bankrupt. And if you go revenue above burn, money begets its own momentum, right? So if you're a startup and SoftBank gives you $50 million, well, that makes you valuable because SoftBank has given you $50 million. If Warren Buffett invests in your startup, what does that do to the value of your startup, right? So money begets its own momentum. So if you can combine a high quality CEO with the ability to raise money, which is what these professional VC firms do, by the way, inside baseball, there's an awful lot of investing in each other's deals and little chippy raises where they all get to mark up their books and their valuations, and you do mine and I'll do yours. Like it's a pool filled with sharks, and so you have to really know what you're doing. That's why it's not for everybody, and it's limited to accredited investors. But I really am fascinated by this Sam Bankman-Fried FTX story because he was actually right. He had another one too, was even bigger. The name escapes me now. And and in fact, the second one that he did, whose name escapes me, I think they just raised at 9 billion, and he put $100,000. Don't quote the numbers, but I'm giving you directional. 100 grand in the seed round, and during the bankruptcy, the bankruptcy estate sold it back at cost
Hmm.
for 100 grand, and that thing would be worth. So if they had properly managed that bankruptcy, um, said another way, if SBF had gotten away with the fraud a little longer, he certainly wouldn't be in jail, and he would have become a very rich person. Now, the reason why this is all fraud is because he gets the upside, and the depositors were taking the risk, right? It's their money that this is supposed to be sitting in, callable accounts that you can like withdraw from. And he had his run on the bank, and that's why it collapsed. But the equity that he put in was actually really quite good. And so he's in jail. But finance guy just got a pardon. It's just a very fascinating situation. So again, to be 100% clear, not defending anything that Sam Bankman-Fried did, but you just can't deny that it's a fascinating situation.
Yeah, I do agree. It is a fascinating situation for sure. So what about crypto startups like coins, like new coins that they make? Do you think those could be good, or most of those are just bad?
It's just not our domain. Um, that has a much stronger, greater fool's trade feel to it. I have participated in some crypto startups. It's how I came to learn of Bitcoin back in 2016. I invested in a crypto startup and small amount of money in. Didn't even know what Bitcoin was. I just kind of did it to pay tuition. And I mean, my $25,000 investment at its apex because there was some publicly traded stock. I had restricted shares that was changing hands during the crypto mania in December of 2017. I think it was marked at 15 million, and I never believed it. It's a zero. I've sent zero to doubt. But I went from 25 grand to 15 million to zero, which just goes to show you how getting a small amount of money in early in something that goes crazy can make an enormous amount of money. If you bought Bitcoin in the hundreds, by the way, when I made that investment, I forget what Bitcoin was, but it was certainly less than 1,000. And so it was just bad timing. The SEC shut it down. And by the way, no bad behavior by the management team. They just, when things go bananas like that, and the SEC decides to make a few examples, you can get caught up into it. They were never charged with anything. They were just bled out by the SEC with legal costs and stuff. And they were a small startup and way ahead of their time. And so, in a different world, Doomberg might not exist because I'd own an island based on that investment, and I would just go and read books and energy articles and enjoy my retirement. But didn't happen, and again, another very viable lesson, right? What are you buying? How do you get out of it? What's the transaction? Is it liquid? When is it registered? How is it registered? Will my broker take it? All 1,000 different questions that come up in the private markets. It's so much easier to just go buy in the public markets where you get an Ameritrade account, or I guess now it's Schwab, and you say I'm going to buy 100 shares of Tesla and I'm going to wait for it to go up 5% and I'm going to sell it. It's so much easier. You don't even charge you to trade. They track all your taxes for you. It's just completely different worlds. Now, because it's got higher friction, it means there's higher possibility for alpha if you're good at it. And the only way to get good at it is to do it and lose a lot of money first.
Yeah, so you just didn't sell that crypto company in time?
Oh, I could never sell. I was restricted. When you're an insider like that and you get restricted shares, they were unregistered. There were some shares that were freely trading on the open market. It was classic, they did a reverse merger and all that stuff. So the ticker traded. My shares couldn't trade. No broker would take those stock. It was restricted, and I would have to get, there was a whole legal mechanism to get. But I knew at the moment I remember exactly where I was sitting at a bar at an airport, stuck because there was a giant snowstorm, and there with my cousin, and we were watching this thing trade, and the mark to market, value was going up and up and up and up, and I never believed this. As I said, like I think I told you, I put 25 in, and it was marked at 50, and I would have taken 50. If you'd have given me 50 grand that day, I would have taken it and walked because I knew it was all BS. Well, I mean, the company there's no reason for it to be trading at a more than a $10 billion market cap. It's just one of those weird market freak stories that you just happen to be involved in. When I invested, I had no idea. I mean, I was just watching this thing, and off it went, and down it came. Once the SEC put the skull and crossbones on it, the whole air came out of the bag. And look, this happens in penny stocks. This is why people are addicted to penny stock gold miners and silver miners, because you get in with the right resource and the right management team for a fraction of what it's worth, and suddenly you get 100 times your money back out. I mean, it's a very addictive feeling. We've had a couple of those in the private world, and the whole hope is that you get a hundred or 1,000 times your money back on something big. Well, risk reward of that is you're going to lose a lot of money along the way before one hits, and so it's kind of like the ultimate gambling at the casino.
Yeah, that makes sense. So you talked about earlier about luxury watches. So I was just wondering how that market's going and the antique and collectible. Is it staying pretty strong or is it going down? What's your thoughts on that?
A little soft here recently. In the watch world, there's only really two brands to buy in our view, which is Rolex and Patek Philippe, and really only certain models within those two brands that are sort of pretty stable. During the inflationary period of the COVID crisis, the response to it, I guess I should say, the Rolex and Patek market really took off for a while. Sold a few watches into that. Um, and the watches I've kept or that I buy are the ones that I really would like to wear and own. I'm not a believer in like leaving all the stickers on them and leave them in the box and never putting it on. So since I enjoy wearing them, The other thing about watches, which is interesting, and this mattered a lot more when I was in the corporate world and you travel a lot, is it's a great conversation starter. I've made many friends sitting next to somebody on a plane where they're wearing a certain watch, and sort of the classic opening salvo to develop some rapport is, are you a one watch guy or are you a collector? Because there's only two, really. There's only two types of watch guys. There's people that buy one, that's their father's watch. They wear that watch their whole lives. And like Jack Nicklaus with his classic, 36 mil Rolex President day date. And or they're collectors and they have 15 of them in a safe somewhere and they can talk about watches all day. So I've actually made probably a dozen pretty valuable connections. If somebody's wearing Rolex Daytona in first class on a trip to China, probably probably a good person to know, right? Probably an interesting person, probably has achieved some semblance of success in life. And so, it's a whole community. And also it's just enjoyable. Like I said, I like to watch, like to see the new models coming out, watch YouTube videos, watch reviews. And so, yeah, but it's not a huge, again, it's a relatively small part of our savings portfolio. Gold is, I'd say probably have land one, gold two, watches three.
Yeah, that makes sense. I think watches are definitely a good investment if you get the right watch because they seem to go up in value. And I think antiques and collectibles, if they're the right antiques, they paintings and stuff, they're going to go up in value. Some of the richest people in the world have really big art collections and stuff. So I think that's one way of preserving and gaining
Well,
wealth.
one one caution is that unlike gold, in order to be a good saver via collectibles, you have to put in some work and have some domain knowledge. Gold is
Right,
gold.
right.
It's got a 5,000 year track record, so that's easier. Land, sure, you need to know location, 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 but you could just ask the real estate brokers, and pretty good, pretty easy way to figure that out. And then collectibles is the hardest, the most bespoke, it's the most niche, which is why it's the smallest part of our savings portfolio.
Yeah, so you mentioned the collectible market is soft. So do you think we're heading towards a recession right now or a recessionary feeling, or do you think the economy is going to be going better?
It depends where you're looking in the economy, of course. Um, so AI boom is real, construction boom is real, natural gas demand boom is real, gas turbine shortage is real. The race for Project Genesis is real. Trump has circumvented the globe and got trillions of investment commitments into various U.S. objectives, and most notably reshoring U.S. manufacturing and military industrial complex supply chains. And that money is real. It's coming in. We see it in the private markets. It's looking for things to buy. Um, and so that part of the economy is doing well. Um, but there's a huge part of the economy that I think is just clearly in recession. And so when you aggregate it up, looks okay. I suppose that's always the case, but there's real parts of the economy that are suffering badly. I don't know. I mean, the inflation is real. And if you're just living paycheck to paycheck, like I just tell you my lived experience as an entrepreneur, I don't have, employer subsidized health insurance. I'm in the Obamacare markets. I have a very typical family of four in the sense that, husband and wife and two kids, both in college, thankfully, not in jail. And our monthly Obamacare premiums for next year, 2,100 bucks a month with a $31,000 total in-family deductible.
Hmm.
This is insane. It's up 15% every year. Seems unsustainable. I can tell you that the inflation rate for healthcare insurance is not CPI. Whatever the CPI says it is a lie. 15%. And by the way, um, your deductible keeps growing. And so that's 25 grand a year before you even start. Like if you're making 80 grand or 100 grand, you certainly can't do it on one salary. So both parents have to work. College tuition is as expensive as ever. Average new car in the US is now $51,000. I saw last week. Um, People on the, Mike Green on his Substack wrote a great piece about the definition of the poverty line, and how shockingly out of touch it is, and how by any reasonable measure, there's way more people under the poverty line in the US than there has ever been. And so it is a very bifurcated economy. I feel lucky because I'm on a good side of that bifurcation, but it's also unsettling because if the foundation cracks, the whole edifice comes down. Um, Societal unrest, totally understandable unrest. We're seeing enormous amounts of wealth being concentrated in very, very few hands. And this is why I think we're seeing these assassinations. Um, these are early signs of civil unrest. I think Western Europe, Britain especially, on the cusp of a potential civil war. And so it is kind of forth turning stuff. It's kind of scary. You take too many bricks from the bottom and the whole Jenga pile collapses. And then so that's kind of where we're heading. So I know it's a long answer to your question, but I don't think we're in a technical recession. But I'm not sure that's necessarily the best question to ask right now.
So do you think wealth is more concentrated than it has been, say, 50 years ago in the United States?
Oh, it's not even close, man. Like, yeah, 100%. And by the way, the only thing keeping the whole thing afloat is the stock market, and most people don't own stocks,
Yeah, that's true.
right? So, yeah, I mean, if you own assets, what do you care about inflation? Your assets are inflating too, so you're hedged. Like owning productive businesses with pricing power is the ultimate hedge, especially if you did it with debt, because then your debt inflates away and you own the business, right? So the richest man coming out of Weimar was the guy who was allowed to borrow the most. True story. Just bought factories on debt and paid back his debt nominally and owned his factories real.
Yeah, that makes a lot of sense. So you mentioned that there's more Americans in poverty than ever or below the certain threshold. So what sectors of the economy are most being hit by a recession right now?
Boy, yeah, it's not really our domain. I don't like to pretend like we know everything because we certainly don't.
Okay.
It's not something we study very because we're not stock pickers, right? We're energy and geopolitics and finance and mostly energy. All I can tell you is energy is both well supplied and demand for it is booming. It's an interesting time. But as far as like which particular sectors would do well, I see, dollar stores doing well because people have less money. Um, but yeah, I'm probably the wrong person to ask that.
Okay, well, I appreciate you being upfront about that. So you mentioned college degree. So what type of sector in college do you think would be good for someone to go into?
I'm not sure college degrees needed anymore.
Okay.
I mean, the US is overproducing unneeded college degrees relative to market demand. The phrase is elite overproduction. But what do universities do? Universities shape and certify minds, right? That's what they do. And so, hey, you got a degree from MIT. That's a certification. That is a social proof that gets you a leg up in the world. Um, the shaping of your mind can be done online for free. I mean, all you have to do is talk to AI all day and you'll get an education. Um, all of MIT's classes are online for free. And certification also is sort of is changing as well. Like top coders, things like that, back in the day, now that not that coding's a career anymore because AI is just taking it over. I'm not so sure what college even means anymore and whether a degree is even useful. And in fact, if your objective is a good job, things requiring physical dexterity would seem to be more robustly insulated against AI encroachment. I think there's a whole wave of white collar jobs that are just going to be obliterated because of AI. I can tell you it's made us infinitely better. Um, it's an amazing tool. AI makes experts better, like all technology, but it's going to cause huge disruptions. But if you're a plumber, carpenter, a finished carpenter in particular, or an electrician, and you're really good at your craft, and you're in high demand, that's not going to be replaceable by AI or robotics anytime soon. And then maybe you learn how to make the transition from labor to capital. Maybe you buy the business you're in and you hire other carpenters. And, that's, let's say Mike Rowe from Dirty Jobs was way ahead of his time, like way ahead of his time. And the technological supernova that we're going through right now, because that's what it is, um, means that, again, as I said earlier, what it means to be human, things that are authentically human, And things that can only be done by humans are going to skyrocket in value. And so if you know how to finish carpenter, if you can be a good finish carpenter, if you can, wire a house safely and in code, um, boy, trade schools are the future. So but back to university, like if you asked me, should you go get pick your favorite liberal arts degree or go get certified as a welder, and I can tell you which path is going to be more lucrative from a labor perspective. Now, you might go to college and learn how to be capital and take some business classes and things like that, but you can learn all that in the real world, too, with good apprenticeship and mentorship. College is a modern phenomenon and not necessarily a net positive one. So it's certainly not at 60, 70, 80 grand a year. So you're going to go 300 grand into debt to get a degree that doesn't get you an entry level job. 25% of new college grads can't find work. How is that NPV accretive? Um, you know,
Yeah, I agree. I just thought I'd ask you, since you
sure.
said you had two kids in college, so I was just wondering if you had a specific field that you thought was good to get into college for. But I definitely agree with you. I think college is definitely less important than it has been in the past. College degree is worth less than it was in earlier history. But I definitely think there's going to be a lot of people who aren't going to be having jobs pretty soon. They're just going to be reliant on the government because there's going to be no work because of AI. How do you think that will all play out with basically so many people losing their jobs? What do you think the government is going to do in response to that?
Not sure what the government's going to do. I do see a world where you could have a wave of entrepreneurship. Um, as business builders, personally, and the businesses we invest in, our kids are in college because that's what you do. Your kids get a college degree, but we're unabashedly pro nepotism. They're going to get jobs in one of our operating companies.
Yeah.
They'll get their shot in the door, and we'll coach them up, and hopefully they'll contribute. But like I'm a big believer in taking care of your family. The family as a clan. I take care of my extended family to the best of my ability. I think the measure of a person is how well they take care of their family. And invested a lot in my kids personally and the kids of the co-founders of Doomberg. And if they want to work in this business or some other business, yeah, I'm going to pick up the phone and get them the opportunity. Now they'll have to take the ball and run with it, but whether they do or not is an indictment of our own parenting. And so you're kind of betting on yourself anyway. But that's a unique situation. I understand that some would say that's pressing privilege, but it's privilege that has been earned. And why do you work if not to provide for your kids and your family and your friends and your relatives that you care about? Um, and so that's our plan. So yeah, our kids are in college. Um, if if our kids were in college studying what they're currently studying and had to make a complete total cold go of it on their own, it'd be very challenging for them. And that's why I'm acutely aware of the advantages that we have been trying to create for them and how difficult it must be to get into this world without those advantages. That's one of the sort of visceral learnings of this whole exercise. Now, of course, I didn't have such advantages, and some would argue that because you know, I started with nothing and built everything myself, somehow that is a superior path. Sure, but when it's your child, do you want them to walk on the hot coals before they realize that it's nice to not be walking on hot coals? Of course not. That's not your instinct, right? And so you want to expose your kids to the maximum um, opportunity set without spoiling them, and also making sure that once they get that opportunity, they nail it. But I'm not part of this crowd that believes that nepotism is inherently a bad thing or that you should leave nothing to your kids or they should build it all on their own. Um, I live for my kids. Why am I doing all of this if not for,
That makes
those kids?
sense. That definitely makes sense. Like, what are you going to do? Give all your money to the government or something? Or
Right.
what's your plan?
Or some
Like,
bureaucratic charity that just wastes it all on, salaries and stuff. No, I mean it's you when you grew, when you lived on a farm, the more acres you owned, the more livestock you owned. Your kids worked on the farm. There's just no question about it. Like this is like, and by the way, when I get old and my mental faculties begin to decline, I sure as hell damn well expect my kids to be taking care of me. You know, like yeah, you'll get your start, but whatever you make, it's coming back too, right? So
yeah, I think it's so sad. I mean, kids who put their parents in homes and they just never talk to them at all, and then just leave them basically defend it for themselves. I think it's pretty sad. So I definitely think your traditional values about family and trying to help your family are very commendable. And I think we need to see more of that happen in the United States and across the world.
I agree.
Yeah, so I'd like to take the opportunity to share the Doomberg Substack. So you can type your email here and get emails on when they're doing articles and stuff. So yeah, they have a lot of great information here. World War III, a lot of interesting things on their site, and you can also get Doomberg Pro. Um, so. What is Doomberg Pro? Each month we publish a recorded presentation for our Pro tier subscribers. So you can get that by becoming a Pro member. So I think that's something that's definitely good. And they just have a lot of great information here. You can definitely learn a lot on their website. Is there anything that you'd like to say about
Sure.
Substack?
So two other tabs you can click on. One is Doomcast. So if you go over there and click on Doomcast, that's all the podcasts we do. We do a lot of podcasts to promote our show. And so if you ever want to hear more, you can go and see those interviews. And then Classics Read Aloud is our new sister publication. Once you click through to Classics Read Aloud, just click on that little green. Um, yeah. One of the Doomberg co-founders and its editor-in-chief is really passionate about finding, preserving, curating great literature, and we've launched that in November, and it's been going very well. And so these are short stories mostly, read with excellent production quality in the Doomberg brand. And it's kind of fun to grow something from zero again. And so we're having a good time with that too. If you're interested in, going out on a walk and listening to a good 20-minute story, or going on a 2-hour car ride and listening to a novel, really put a lot of effort into this. And as it says on the screen there, you're never too young or too old to enjoy being read to. And this is our sister publication as well. So yeah, Doomberg Pro. Alexander has been great. Really enjoyed the discussion. Thanks a lot for having me on.
Well, I really appreciate you, Doomberg, and giving us all this great, insightful information. And definitely subscribe to them on Substack. And I definitely like how you're making a read page that you read to people, because I think people, instead of watching like funny videos or something, can learn something by being read to a book when they're doing work. So I think
100%.
that's very good. And I just like to thank you, Doomberg, for coming on the show. And we definitely would like to have you on the show again in the future.
You bet. Looking forward to it. Thanks, man.
Okay, thank you everyone who watched the video. Please subscribe to the channel, leave a like on the video, and share this video with all your friends. And I hope you have a good rest of your day.